How's it going, everyone? In this video, we are going to go over our entire 2024 YouTube performance. So I have an Excel out here with all of the data for the year that I've collected, and I want to have the SPY chart as well, because we're going to take a look at how our performance varied on a monthly basis, right, and see if there's any correlations there. But for right now, I'm just going to make this a little bit bigger, so we can just get nice little picture of what's going on here. So I'm actually going to hide this as well. Okay. So overall, in 2024, I had 235 picks. And of those 235 picks, we had 166 wins, 46 losses, 23 scratches for a 78.3% win rate. So, first of all, I think that's really, really good news. We were very consistent, right? We were above that 75% win rate for the entire year when you average everything out. So, first thing, I think this is pretty strong results, and it demonstrates a pretty high level of consistency. So let's get into the quarter section here that kind of breaks down some of the ups and downs, because it wasn't like we hit this number every month, right? We oscillated around this number. So you can see in Q1 and Q2, we had a pretty strong start to the year. We had averaged about maybe an 82% win rate, and then in Q3 and Q4, we were closer to a 74% win rate. So that brought us down a little bit over here. So this, right, technically right below 75, but kind of right on the cusp. And I think with that sort of, noise, it's a little bit of noise in my opinion when you're that close. If you had, right, if you flip this to something like, 44 and 14, right, two losers become winners, two winners become losers, and so on. They flip. You're easily above that level. So kind of right on the cutoff, which is why I'm not too worried about that. Now, on a monthly basis, here we have all the wins, losses, break-evens for the month, as well as what they total up, and the win rate. Now, you'll notice the win rate's highlighted in a couple different colors, which I'm going to explain in a second. But let's focus on the red ones over here. Now, most of the months were above that 75% win rate. There were 3 months where we fell below, which is March, July, and October. So in these lower performing months, we averaged closer to a 64% win rate. So we had 3 months where we fell below. We had 9 months where we were positive. So I think overall that's pretty solid. Ideally, you want to get all of them above 75, but what's important that I see here is that these red months represent a floor, which means that on my worst months, right, in my worst periods of performance, how did I do? And I didn't slip too far below. I didn't really slip below 60 at all. So I kind of dipped below maybe 60 to 70%. That represents a performance dip. So there's a couple of different things we're going to analyze over here. I already talked about this performance dip, but let's first go over the overall trade performance and just kind of consider, okay, what does an average performance look like? What's under? What's over? What's an average good month or a bad month look like? And then how my performance matched up with the market. And then after that, we're going to take a look at the breakdown of day trades, swing trades, and earnings time spreads and see how those percentages and amounts change throughout the year. Now, one thing before we get into this is this value here, this NT. So NT stands for no trade. And that means I gave a pick, but we didn't end up taking the pick. And this is usually a kind of conditional setup. So a great example is I might see a day trade setup, right? And I'm recording this video at a particular point in the day. And with day trading, right, I'm very precise with my entries and, a very small window of opportunity. And when I record that video, that window of opportunity may have already set up or may have not set up. So oftentimes I give a pick or maybe 2 picks and I say, look, well, maybe this stock is setting up for a short, but I want to see the market have a weak bounce and then reject off VWAP, right? So that's the condition for that trade. And if that condition's met, we take the trade and it counts. But if it's not met, we don't take the trade. So for the year, I actually gave 324 picks, but of those 324 picks, we only took 235 picks. So we took roughly about 3 out of 4 picks that we did. And you notice that this number changes over time. It was very high in this middle half of the year, and then it kind of died down towards the end of the year. And we're going to get to that in a second. So that's what this NT column is for. So I already talked about this overall performance and a quarterly performance, as well as this monthly performance. And I want to take a look here at this analysis right here of this average and then the good and the bad months. So on average, I gave 20 picks a month, and we got 14 wins, 4 losses, and 2 break evens. So that's kind of a quote-unquote average month. You can see that we actually rarely hit that month. We kind of jumped around between them, but that's a good sort of rule of thumb to see, okay, well, am I meeting performance or am I falling short of performance? So that's going to be my bar. The average win as well for these months, 78%, which matches this up pretty closely. So 70% over there is probably a rounding error, but that's my average win rate overall. So that's kind of the bar here. Now, if we look at the good months and the bad months, what I've done is I've averaged all the months that are above a 75% win rate, and I've averaged all the months where I was below a 75% win rate, right? That's kind of my barometer here. So we had 3 bad months where our average was 64%. So that kind of represents my average C game over here. And then that 84%, right? That's the average for the months where we exceeded a 75% win rate. And what I'm really comparing to over here is this 84%, or if that's my average good month where I'm on my game, how many times did I actually exceed this 84%? And that's this number right over here. That's what I've colored green. So at 3 months where I'm going to call this my A game, where I was really on top of stuff and I, didn't take a lot of losses. I really nailed and synced in with what the market was doing. So that was my 3 sort of A game months. And then the other ones were kind of in a pretty normal range, right? 85%, 75%, 80%, 78, 76, 81. So that's a pretty good standard of operation, and that's kind of my typical B game here. So this is really helpful because now it helps me quantify, where am I, how am I doing on an average day? What does a really good run look like? What does a really poor performance run look like? The other thing that's interesting over here before we get to the market is that if we look at when my bad months happen, so I had 3 bad months, right? And of those 3 bad months, 2 of them followed after my best month, right? So here's a really good, strong performance in February, didn't repeat in March, really strong performance in June, didn't repeat in July. So to me, my suspicion is that I was pretty synced up with the market, but I didn't anticipate any changes or potential changes in the market. So that's what caused me to take the dips in these next months. October, I know, was a pretty LPTE month, which is not something you typically hear. But that's probably why the performance is really low, because we had these low volume, crappy conditions. So let's take a look at some of these months. Let's take a look at March over here and see what that looked like. So in February, we're still going strong, and you can see that we had this sort of stair-steppy, uppy trend. If you look at January over here, we had this breakout over here, and then we had a nice little run earlier in January. Gave back some gains. February over here, we opened, and then we had a pretty good run on Feb, all the way up to here. And it looks like what I was doing, I think I was probably adding on breakouts. So we had a nice run here, so I probably added on this breakout and I got a nice move. We pulled back, and then I probably added on this breakout again, and got over here. So that's probably what it's doing market-wise, and that's how I was able to. We still had a decent market momentum, so I was able to get some nice profits on those swings. But in March, you can see that every breakout we had ended up coming back, and we either test that level or we came back and tested support. So these started to fail, and that's probably why I took some of the losses that I did there, is because I really had to start not taking as many swing trades and still buying some dips. So that's one performance there. Let's take a look at what's happening in July. In July, we had a pretty bearish month. So everything that was working in June, so here's the move in June. We got this pullback. Yeah, we had a nice little run up in June. I think it took some nice gains there. Kind of compressed. July, we had a nice run, but then we got this pretty violent market move down. You can see how the month ended up being pretty flat. Let me take a look at this. Yeah, here's July here, right? So kind of a flat month. March was actually a little bit higher, and we took a few more losses. Here's July, and then October also a kind of flatter month, so we didn't do as well in October. December also looking fairly flat right now. We'll see if it ends like that. So in June we had a really nice win rate, but then looks like it wasn't. We weren't really able to replicate that in July, and my suspicion is that it's probably has to do with the bearish sentiment over here. The fact that these gains were stripped away pretty quickly, and we have to wait for this bounce to resolve. Okay, and then we get into October. So here's September, compressing, compressing, compressing. So October starts off over here. We're in the compression. We have a nice little run over here, and then we pretty much end in compression. So we don't really do a whole much in October. There's one move here for the month, and that's it. And then it's pretty much LPTE conditions. Markets waiting for the election, whole bunch of mega cap techs, economic releases, and so on. So that's probably why. And you can see in October, we actually ended up taking 20 trades, but we had a lot more scratches that month. And, again, if 3 or 4 of these scratches turned into wins, then we're going to be probably in the green there. Okay, so we get a nice little sense of how we did related to the market, and just some ideas of, okay, well, the month that we didn't do well on, 2 of those, 1 month, July, was very bearish. October was very LPTE, and March was also fairly LPTE, although we had a bit of a trend going into March. So I'm going to put that on the top over here, LPTE month, bearish. All right. The other thing we want to do is then look at the months that we actually did do well on and see how they looked like. So if we go all the way back to January, we had compression and then a nice bullish trend. So this was fairly bullish, I would say. February was also pretty bullish from what I remember. Right, we had a nice run here. We had another nice run here. Flatten out a little bit. We had a pop up over here. So we had this was still, it wasn't like as good as this. It's getting more patchy, but the run is still really, really nice over here. We're able to take some gains. Now, if I look at the run again from, maybe I should put this on a weekly chart. Let's get the weekly over here. Yeah, so see nice gains, January, February, and then here is March, right? We're getting some gains here, but this is got a couple days of choppiness in March. And you can see how many red candles are in here. We're in this slight uptrend, but it's really now actually getting in on strong stocks on a dip and then taking short-term swing trades. That's pretty much the name of the game here. And then, yeah, this bearish engulf is your warning sign. You see how the trend is starting to bend and slow down. And it looks like it's, bending and slowing down in a couple of places. So it's kind of hard to gauge pretty much in March. It's like, okay, we're still going up, and then, we're slowing down, right? It's bending a little bit. Push up a little bit higher, get the gains, right? Breakout, test the gains over here. So the fact that this breakout has no follow through, that is a sign of some selling pressure here. Okay, so April, we are bearish for most of the month here, and then we get a bounce. So I'll just put bearish to bounce. Okay, And then let's take a look at May. May, mostly pretty bullish. Get this bearish correction here in May. Let me actually get a little pullback. So May, I'll say mostly bullish. June, yeah, that's a nice, really nice bullish run over here. And then it kind of compresses. So June is pretty bullish as well. August is pretty volatile. If I start from August 1st here, August 1st, we get the poke down below. Super high volatility. So I'll just put volatile. I know September was bullish, and then LPTE. Because I'm quite familiar with these next couple of months here. So here we had a really nice run in September over here, right? And then we kind of compressed for a little bit. So we had a nice little window of gains over here. Looks like that ended right around here. Yep, so LPTE, and then November was quite bullish. That was where we ended. And then December looks like it's pretty LPTE right now, and volatile. So I'll actually just put in volatile here. Okay, so now you can see that when the conditions were bullish, we pretty much did really well. And then when they were bearish or LPTE initially, that's when we kind of took some heat. Now, the one nice little clue here is when it's volatile, I traded much less and I had a pretty high win rate versus August, where you'll see in a second where my day trades kind of saved the month, but my swing trades really kind of brought us down. But the LPTE is an issue here. Now, the bearish to bounce is not bad just because we actually have some volatility, so I'm able to take some nice day trade shorts and favor that side. So I'm able to get in any kind of movement I do well, but I think to me these LPTE days, they really stick out like a sore thumb. And I think those are times where you see that, look, we're taking the same amount of trades, but a couple of trades that should go up, we don't get the move, and we lose some probability on these days, right? So I think this is really where you want to probably trade less and trade smaller size. Now, the July bearish day, we're going to have to analyze in a little bit, but I think this is pretty helpful. Let's take a look at the trade diet. So the trade diet is what kind of trades you take, right? Now, some traders are more swing traders exclusively, some are day traders. People have different durations. You can do short-term swing trading, long-term swing trading. You can have more put credit spreads or more calls or call debit spreads. But to me, the main trade diet here is either day or swing. So if we look at our trade diet here, I have this pretty much the same exact breakdown. And let's take a look at just our overall performance on each of these first, and then we're going to dive into the months. So on the day trade side, we had 100 total day trades, and we won 83% of them. So we had 74 wins, 15 losses, 11 break-evens. For this win rate, by the way, we're excluding break-evens from the calculation. On our swing trades, we had a 75% win rate, 79 wins, 26 losses, and 8 break-evens. And we took 22 earnings time spreads, 14 wins, 5 losses, and 3 break-evens. So you can see majority of the trade diet is going to be day and swing. And then we have a little bit, looks like 10% of those trades are earnings time spreads. And I can actually do a little calculation here. There we go. So that is the percentage of trades that the trade diet subsumes. You can see it's mostly day and swing trades. Now, in these days and swing trades, you can see, all right, well, my day trades are pretty good. That last quarter, little bit under, but still very strong, especially in Q3. Very strong day trading performance over here. My swing trading, very strong, very weak, very strong. Okay, that's an issue of concern. We're dive into that in a second. This Q1, now on the earnings time sides, because it's so kind of varied, you you can see that there's a couple months where I don't take any earnings time spreads, and other months where I take a lot. Earning seasons is March, so I'm just gonna actually just highlight the March. Or sorry, let me go back here. Earnings season, earnings season, earnings season, and earnings season. So usually I take 6 trades in this earnings season right here. July I took a lot more trades. I took 12 over here and then 2 over here. Didn't take up any initially in the month, but I tend not to take much trades. It looks like it takes trades more in the middle of the month, right? Out of my 22 trades, 13 of them is the month after earnings, which kind of makes the most sense. I think they're a lot more earningable setups, or even actually if I put this November here, 15 out of those 21 trades are the month after earnings. So February is probably when I expect to take more earnings time spreads. The other months, not as much. It just kind of gets dead, especially the month before earnings. So that's one thing that's interesting, but not too much to go over here. To me, it's a strategy where, all right, I mean, it works. You can probably get some money, but I would not size too much on this, and I'd really take a look at this on a yearly basis. Swing trading. Okay, so swing trading looks like we had 2 strong months here, dip down below, another 2 strong months here, and then 4 mostly weak months. This month was okay-ish, and then 2 strong months at the end of the year. So there's a lot more volatility in the swing performance. You can see that we either do really well, and we had a couple of months where we did like exceptionally well. 1, 2, 3, 4, 5, 6. So 6 months we did really, really well. We had 3 months where we did okay, and we had 3 months where we did very poorly, right? We're talking this. What's this average here? 40% win rate. Okay. Now the good thing is the months that we did really well, we actually took a lot more swings on those months. And the months that we did pretty poorly, so if I sum up these months here, where we did poorly, I took 22 trades in these poor months. I took 34 trades in these okay months. And then I took 48 trades in the good months. So that's a good sign that I'm taking more trades and I'm winning more trades when the conditions are right. But if we look at this, these conditions here, LPTE, right, bearish to bullish, so we took some losses here. July bearish, so we maybe took some losses. August in the volatility, right, we lost a good chunk of our wins because I know we were short a couple positions here, and then the market in August, right, I know I think I'd taken a couple shorts somewhere around here. Market had a big pop, and I ended up taking too much heat, and it took some big losses somewhere over here, where I maybe could have scratched or taken some smaller losses early on. That ended up being a pretty big chunk out of my account. So there were some sizing concerns there. But yeah, fairly volatile on this leg up. And I ended up being, I mean, I was one step ahead of the market, but I wasn't willing to take the heat one step ahead of the market, unfortunately. Okay. Now, October was LPTE. September wasn't too bad. We had 3 win through losses, so I'm not too bummed about these middle months, especially because, again, these are some smaller ones here. I'm more concerned about how do I bring up the floor of my swing trades, right? I could live with the month where I win 70% or, even 2/3 of my swing trades, right? That is fine. I really want to see how can I bring these up. So we didn't take a lot of trades, but LPT conditions, a lot of swing trades. We had a couple of scratches, so this is one where probably would just avoid taking swings or be very, very low on swings, right? See, December was volatile and LPT. I only took 2 swings this month, and they were short-term swings, I should add. October, I have to check the trade diet here. So I'm going to go over and see what I put in October. Okay, so looks like where I took the losses on my swings, I had some CDSs, I had an Oracle in the money call that died, NVIDIA long CDS that died. That's not great. I had a couple of day trades that also lost in this month, and a couple of break evens too. Lunar break even, PCAR break even, Sedge break even. So, looks like in October I took some PDSs and CDSs that died. No conditions for these types of trades. So, that was the main learning. So, put in October here. New note. Basically, I took the mistake was, or maybe I'll make another thing here. Let's edit this note. Okay, so the mistake here is debit spreads in LPT conditions. I think I probably probably didn't have a lot of follow through on those movements, and I should have been buying dips. So I think day trading was probably my better bet, and these are months where I would have been better off just not swinging. Now in August, if I add my note here, August was I size too big. I chased, so I needed a smaller size, and I know I needed to game plan better in August. Needed a better game plan, and all of those would have allowed me to take smaller losses on the swing shorts. Yep. All right, and then let's take a look at July. Okay, there's that. Yep. So, yeah, outside of, I mean, the thing is, you can see in August, our day trading saved us because it was so volatile. So we did excellent on our day tradings and our earnings time spreads. And really, it was a month where I probably shouldn't have been taking too many swings and probably sizing them appropriately. So that was probably the learning there. July, now let's see, at an AMD CCS that popped out against me. ASTS swing long also went against me. JMIA long swing. So I took all of these. Let's see, a 722. Okay, yeah. So this JMIA one, right? You can see that I took a swing here, and it was probably a little bit too early because we hadn't confirmed support. This was just a bounce. You can see when we confirm support, it's a kind of a stronger bounce, and we usually get some sort of bullish hammer. So this gap up and go, this got faded and it got slapped out of the trade. So in this case, right, I was a little bit too early to this move, especially we had some heavy selling pressure. It's going to take some time for that to base up, and we needed it to, right, it either has to come down deep enough, and we need to see a stronger buy reaction. That this is not a strong buy reaction. This is a strong buy reaction. This compression to a breakout is a good entry. This move down, big reversal, that is a good buy reaction. So you need buyers to really step up, and that's going to create that next trend. Something like this, right? This massive move here, big buy reaction, come back down, test the gap, base up, next buy reaction. So, yeah, probably a little bit too early on some of those moves. Ended up costing me. I didn't take too many trades in July. Took that swing long. ASTS, why did I take that on the 26th? What the hell's happening? See, look, again, I'm on this bounce, and I'm too eager to buy into this bounce when we haven't quite confirmed it. Now, if I took it on the 31st, that's at least somewhat more justified, right? We've based up a little bit. We're into this gap over here, but we didn't quite clear it. But I think this is more justifiable. Now the next day you see you got smacked down hard, and that would tell you that you should probably get out of the trade because this should see some pretty immediate follow through if it's legit. And if it's not legit, then you have to get the hell out of that trade. Yep, and that's your clue to get out of the trade. So yeah, looks like in July. Look at the note here. Just taking swing longs before the market has found support. right? So we're better off in these months just not taking many swings, if at all, and just sticking to the day trading side where it's just, I mean, we're absolutely crushing it on this day trading side. Okay, now April and March. Now March, I know that we had some LPTE conditions. So I'm going to take a look at my trades here on March. Let's see here. Now we got to go fairly back in time. All right, so some of these were wins in March. Let's take a look over here. But yeah, I mean, I took some trades. Let's see, 3-4, 3-5. So 3-5 is not a bad place to take the trade because it's on kind of on a dip, or even 3-6 when we start to hold that. But yeah, it looks like took a couple of losses, long swings. Some of these debit spreads ended up winning. Some of these we scratched. But we took some wins, it looks like, earlier in the month, and I had it this period from the 5th to the 21st, where I took a whole bunch of losses. And then after the 21st, I actually did a lot better, which is interesting because I didn't profit from this massive move up here. But I think this is kind of a clue where this range here, we're just kind of compressing and chopping around. Market's not doing a whole lot. Slight bullish bias, barely though. It's very, right, we're kind of really in this compression range here. So I think that's probably why I took quite a bit of losses here. So let's put over here, new comment. Most of my losses were in 3.5 to 3.21, where the market was range bound and compressing. All right, so that is another one there. And then April, I'm not going to worry about April and September as much over here. I think we addressed some of the big ones. Okay, now we got day trading. So interesting thing about this trade diet here. You can see that the number of total picks I give, relatively consistent. This is an outlier and that's, this is an outlier and that's an outlier, but ends up tying out. If you think about 20 trades over 12 months, you'd expect 240 picks. That's pretty much what we got. Now, we started the year with a fairly strong amount of bullish swings and a lot of swing trades in the first quarter of the year when it was very bullish. In April, we were 50-50, and that resulted pretty well. Then in the next 4 months, I took far more day trades and swing trades. Now, mentally, it's because I took some big I gave back some of my gains. I don't want to say big losses. I did take big losses, but I gave back some of my gains in April. So I was way more focused on day trading, and those were the basis for a lot of my picks. But then in September, we saw a positive flip back around, and then October it was even, and then November was very very strong on the swing trading side, and December more on the day trading side. And these should match the conditions that we have here, where, okay, LPTE, right, takes some, LPTE conditions, you can see that, actually it's kind of mixed, but I probably shouldn't have taken as many swings. But on these bullish, bearish, volatile conditions, yeah, when it's volatile, when it's bearish, we have pretty high intraday ranges. Looks like I was able to do pretty well on these picks, and had several months in a row where I got my day trades above 75%. Yeah, and if I had a sample of 100 day trades over here, 83% win rate, which is pretty much in line for how I did in my real account. Interesting thing is I never took more than 3 losses on my day trades. And looks like I averaged, kind of varied here, more like 6, but you can see there's periods where it's highly active and lowly active, so or have little activity. So I don't want to put too much time on what's your average day trade win. It's really going to turn on the market conditions, where if there's strong bullish conditions and you can swing, right? My swing trading takes up more of my bandwidth, and then when the conditions LPT or maybe it's more volatile, right? I took 13 day trades and only 7 swing trades, which I really shouldn't have even taken. I should have just, right, kind of took those out. So looks like that is what I'm getting here. Now, if I sum this up and I'm thinking about my potential areas of improvement, October we had LPTE, March we had LPTE. So to me, it's just LPTE conditions, reduce probability. Same thing in October. Okay. Now, let's think about what we can take away from this, right? Where are the areas of growth? Where's the areas of improvement? What we did well, what we didn't do well. So I think first note is we did a pretty good job of being consistent. We had a high level of consistency. There were some dips, and there were some performance dips, and that's normal because I'm still learning. But overall, we were pretty consistent. No performance dip was worse than a 60% win rate, and I peaked really at a high of almost 95%, 94.4. So that's some really good stuff. Second is my trade diet. I did a decent job of matching the trend, but you can see that it took me this year to kind of learn when to push, when to pull, when to throttle, when not to throttle. And I think there was a couple learning points I could have. So first, in March, I should have probably reduced the trade count, right? Reduce the trade count because this is lower probability. These LPTE months are the ones that really hurt my probability here. In April, my day trading, and it sort of ended up saving the day, but I had a couple losses on the swings. But when it's bullish, and this is kind of what I saw in May, really. In May, I should have had more swings. Because if you look at what happened in May, right, we had this top. We should have been taking swings here. We got this nice little bounce. We got a double bottom. We're holding up here. See how we're basing up, right? We're getting these higher lows. So basing up here, nice tall bounce, right? So this is where we want to actually be taking and riding swings. So the mistake I made, I think, in May, honestly, is to not take enough swings. So let's look at, I want to make another area here, improvements. So, right, in LPT a months, take less trades and pretty much reduce swing count to very little. Okay? And then in May, right, I need to basically add, I need to take short-term swings. Oops. And ride them hard because we had a nice trend. So I did well on my day trades, but I think May should have been more of a swing trading month. I think June I pretty much only gave day trades, but I ended up doing pretty well. June also should have been a strong swing trading month, and I think it did. I took 7 swing trades, so no complaints on June here. July, here's a learn. July, you have to really confirm support to form before taking swing longs. So that was the mistake I made in July. I really entered them far too early. And then August, pretty simple. Size smaller, so you can. So I have to size smaller and game plan better in order to take heat if you are kind of chasing the market. After this kind of massive drop, you can see how we took it over here. It did come back to 80 Macy. We didn't chase it on this low over here. But as soon as this kind of got erased, that is a kind of a bit of a warning sign. And then this was, I think, the nail in the coffin for those that bounce should not have been that tall if sellers were more engaged. So that's tricky to trade, in my opinion. I think the better point would have been to wait for the market to roll over in September. And I think that's probably what I'm going to do in the future. I don't know. I feel that I am not crazy about taking these chase entries, especially in a roaring kind of bull market. This big overextension, not too crazy about that. So, and then in October, let me see September here. We take some swing trades in September, and then October. October, we're going to take less swings so that less swings and less overall trades in an LPTE month. So that is the summary here. So if I were to highlight here, let's do something here. So okay, these blue months should be taking more swings, swings, okay? And then these gray months, this is when you should have lower activity, right? And then in these bearish months here, this is when you're going to take more day trades, and then day trades. So it's kind of matching a little bit better to what the market is giving you here. Yeah. You can also see here we actually had far more no picks when our day trades increased, because there's a lot more opportunities that could set up and don't set up in the span of a day trade. But if you're doing a swing trade, then the pick is already sort of setting up on the D1, and your entry is in the course of that D1 candle versus an M5 candle. All right. Yeah, so this is our analysis for 2024. This is all the picks, how we did, where we could improve, a lot of this in real time. And I want to conclude this video with what 2025 is going to look like. So for this 2024 YouTube performance, or this 2024 series where I've been making a video every day, giving a pick every day, the goal of it was for me to polish my decision making and increase my confidence. And I think I've got that, where we have a really nice body of stats that show consistency. And even towards the end, last couple of months here, I noticed when I'd watch a recording of a video, sometimes I would be on autopilot. And I think it's a good thing or a bad thing. The bad thing about it is that I don't think I would speak as clearly. I don't think I, this is funny because I talked about speaking clearly and I'm not speaking clearly. But I wouldn't get the thought out in the best way possible. And a lot of that was because I was running on autopilot, where a lot of that decision making was kind of automatic, and then I had to do some detective work cognitively to understand why I was feeling the way I did. So I think that does represent a jump in skill, where a good chunk of that decision making is already automated. Now, despite all that, I think that these daily videos have had now diminishing returns to my growth as a trader. And I think it makes sense for me to end this series in 2024 and start something different. Now, I talked about how we have a 78% win rate for the year, but in my real account, I ended up with a minus 13% return on my investment, taking into account fees and transfers and trading performance and everything like that. Everything into account, 13% down. And so I'm thinking, okay, well, what's the reason for this discrepancy? And it mostly came down to sizing and just learning how to trade in a stair-step bull market. But the bottleneck now to me becoming a professional trader is not my ability to get wins as much. It's really my ability to make money. And getting wins is just sort of a proxy for getting money. I feel very good about my win rate. And it's now about lifting up the floor. So I'm going to stop making these daily videos. There's going to be no monthly reviews. And instead, I'm going to make two different kinds of videos. The channel is going to be more business focused. And I'm going to make quarterly earnings videos where I'm going to set a goal. And I'm going to talk about more about this in my year 3 trading review and kind of what I learned, what I didn't, where I struggled, what I achieved, where I can improve, and so on. But and I'll set my goals there, but I'll have kind of quarterly earnings videos where I talk about how much did I earn, why did I come below or come higher, what do I expect to earn for the next quarter, and I think that'll help me think of this more business-like, and again, hold me accountable by making these videos. The other thing I'm going to do is a weekly trade reviews, and this has a few purposes. So the first is that for a business plan, it's kind of like a weekly check-in if you're in any kind of company where you just kind of see how things are going, and it's the right level of granularity where I'm reviewing all my picks for the week. If I had a bad performing week, why was that? Is it something I have to worry about? If I had a good performing week, why was that? There's something should I be worried about being overconfident? Am I in sync with the market for this week? Has my outlook changed? So that's a good level of granularity to just make sure that everything is coming in line for the quarterly earnings video. Now, the second part is the accountability. Now, I mentioned that there's a discrepancy between my return and my win rate, and some part of that discrepancy was that I would give advice in the video, and most of the time I would follow it, but sometimes I would not follow it. And I want to close the daylight between that discrepancy. So by reviewing all the trades that I actually picked, or I actually took, and some of these are like, SPY trades, or maybe an additional swing long or an additional day trade that I took, but that setup only happened after I recorded my video, stuff like that, where I really evaluate the true trades that I take and expose that to the sunlight, and then evaluate that at a more coherent and public level. The last part is the improvement aspect. So when I review all the trades every week and I review my decision making, I'll be able to accelerate how fast that I improve my ability to spot mistakes and course correct. And it's something I've been doing on and off, but with making daily videos and even monthly trade reviews, sometimes it gets hard to just put in all that time and not get burned out on these weekly trade reviews. So I think shifting the time away from the daily videos to now the weekly trade reviews will be the best amount of benefit for me as a trader. So those are the changes. 2 types of videos: weekly trade reviews and then quarterly earnings videos. So be on the lookout for those. But yeah, thus to conclude 2024, I think these videos have been largely, self-serving initially. They weren't really meant to help anyone, but there has been a wonderful and positive consequence of them actually helping other traders in their journey, whether it's giving inspiration, whether it's having another source of opinion and analysis, whether it's taking a pick that I recommended or not. I've talked to some people on the YouTube comments, over Reddit, in the one option chat, I think even in the Discord. So it's just been a nice way to actually connect with the community because trading is not a very common skill. So there's sometimes it can be hard to talk about all these things. But when you have a nice community like we do, it is nice to share all of that progress and those journeys and those ideas with someone else. So if you found any help from this, I'm glad you did. And I hope this serves, and I think this will serve as a living documentation of different trades and the realness of this edge, right? Relative strength and relative weakness. Yes, it was a good year, but this year is not as straightforward as it looked like. There were different changing conditions, and I think if you're a novice trader, it still could have gotten wiped out. So thanks for watching, everyone. Thanks for everyone who watched the videos and liked and commented on the videos and found that these videos helped them in 2024. I think 2025 will be different, but very valuable in a new way. And I hope you guys stick with me then.